Well, to help us understand what this move could mean for global energy markets and the wider economy, I'm joined now by Cuneyt Dirican, an economist who's joining us from Istanbul in Turkey. Cuneyt, thank you very much indeed for joining us on Prime Time. 400 million barrels. I mean, it sounds like a big number, but how significant is that intervention in real terms?
Okay, first let me say that I wish everyone a safe and a peaceful world. And let me begin with the famous quote of Atatürk, the founder of the Turkish Republic. The famous quote is, "Peace at home, peace at world." So I want to start with that. Your question, when we come to your question, the answer is that the amount is almost equal to 30% of the total reserve of the International Energy Agency. So which is controlling about 1.5 billion barrels in emergency stocks. It means that 30% of the, let me say, reserves can be used by saying that. But we will see if it will happen or not. On the other hand, the daily consumption of the world in general is around 100 million barrels, which means only 4 to 5 days of the global demand can be fulfilled by this amount, let me say, supply or by this decision. Apart from that, I want to remind you also some figures, some numbers. The daily producer countries, the first, let me say, countries in general are United States, then comes Saudi Arabia, and then comes after Russia. And when we look at the reserves, the first rank is belonging to United States, the second one to China, and in the third rank we see the Japan. After that comes South Korea and India. When we look at the proven reserves of the oil all around the world, in the first rank we see the Venezuela, which also we have seen the clashes before on the Maduro cases between United States and Venezuela. After that comes Saudi and Iran. And if we talk about the global reserves, oil reserves, we should also talk about the financial reserves of the Federal Reserve System as well. Only 20 billion United States dollars let me say, foreign exchange reserves they have, which means sometimes they see also the negative, let me say, foreign exchange reserves in their balance sheet. Apart from that, if we are talking about the oil strategic, let me say, reserves, we should also talk about the United States strategic petroleum reserves, which is the first rank among the whole countries around the world. It is the capacity is almost equal to 750 billion barrels. But during the Biden period, during the ex-presidency of United States, in order to fight with the inflation, they sold around half of their strategic petroleum reserves. And now, after the, let me say, Mr. Trump period, in 1 year, they can only fill, let me say, 20% more, which means almost equal to 400 million barrels now are there in their reserve. So when Mr. Trump says that we are very strong on the strategic petroleum reserves, it means that they now have only the half of their capacity.
Okay,
I can say that.
Very, very interesting. I mean, you've clearly got a great handle on all of these numbers. And it's very interesting what you say about the 400 million barrels sounding like a big number, but actually only being a few days worth of total global usage. I mean, taken in concert with the reserves that the world has available to it, is this going to be enough, this intervention, to in some way kind of release a little bit of pressure, do you think?
So the so-called amount that will be released by the International Energy Agency is almost equal to, let me say, existed strategic petroleum reserves of the United States for the time being. For the market reaction, in general, the markets react in general to supply expectations. So they look in the first rank the expectations, and after that the information flows. So not the physical barrels. For the short term, it could stop, or it will, let me say, cap short term panicking, or let me say the volatility. But in the long run, if it persists, then it means nothing. So when we say about, for example, 400 million barrels, it is almost equal to the 4 to 5 days of the, let me say, global, let me say, usage.
Yes.
So when we look at the balance of the need, or the demand or the supply, we can only fulfill with this amount the 4 to 5 days of, let me say, global demand, which means nothing for the financial markets. So they will look, the markets in general will look at the information flows and the expectations apart from that. And also the information coming from the Strait of Hormuz also is very important. But for the medium term, for the longer sustainability or the stability of the markets, it will depend on the shipping flows, not the reserve barrels as well. So
Yes.
for
I mean,
for that reason, I
you
think
mentioned
expectations and the information is important.
sorry to interrupt you there, but yeah, you mentioned, it's very interesting this. You mentioned the Strait of Hormuz. That is something that I think the whole world is focused on. To what extent are markets sensitive specifically to that route? And I'd also like to ask you, is there a way in which that if it does remain closed for the foreseeable future, that somehow the markets can adapt and absorb it and live with it in some way?
So we have to look at the supply side of the Venezuelan oil, which is controlled by the United States for the time being. And apart from that, there are alternatives also for the Strait of Hormuz. But let me remind you one thing. This is the only way in that region that you can pass oil from the Gulf region by ship. So it means a lot for the financial markets. So 20 million barrels can pass per day. 20 million barrels per day can pass from Strait of Hormuz through it. So, which means it is equal to, let me say, 20% of the global daily consumption. So, it means also nothing for the financial markets. That's why the expectations and the informations will play an important role. But on the other hand, this is not only the oil or the Strait of Hormuz that play a vital role on the financial markets. We have to also look the insurance costs, the logistic costs. On the other hand, the banking cost, which let me say, letter of credit reserves that can put by the importers, or the other issues that can face the exporters, and also the waiting costs also play important roles. And for the financial markets, as well as the time value of the money will play an important role for the, let me say, financial contracts, future contracts. So those are the let me say, important headlines for the let me say, financial markets. And also the Strait of Hormuz will play an important role for that type of information for the markets. We have alternatives for that, but the alternatives also are not good, or that these alternatives cannot be sound good for some countries, like let me say, for US, for example, to, let me say, ease the Russian embargoes in the first rank. So it will not help the European Union side, and also the US as well. And also a global recession, which is not good also for everyone, including in the first rank for the US.
Now, Cuneyt, those of our viewers who will be very interested in this, who are not necessarily economists, will nevertheless be focused on increasing oil prices, increasing fuel costs, moreover. What kind of economic impact could we be likely to see if those prices just keep on rising?
Let me remind you the 18s, the year between 1971 and 1986, the 15 years period in the last, let me say, century, the end of the last century. So we have the same situation, the same case. At that time, we had the first Yom Kippur War. And that was now in the region, I call it the second Yom Kippur War. So in the first Yom Kippur War, after that, we have the barrel price went 3 times up together with the gold ounce price. And then after comes the global recession and the inflation in the first rank in United States economy. And after that, we have seen stagflation at the end of the 70s. And after that, we have the huge, let me say, interest rate hike in Federal Reserve System with, at that time, the President Walker. So at that time, the inflation in United States is more than 20%, and also we have seen also crashes in the stock markets. I think this is an accelerated, let me say, repeat of that period. So every increase, every $10 increase for the time being will add almost half points, 0.5 points to the global inflation. So if it will last longer, that clashes, which is led by United States and Israel, we might have the same scenario of, let me say, 18th. On the other hand, the impact could be most probably, if we have inflation, we will see the cost rising on the transportation side, airlines fees, and also insurance fees together with the logistics, etc. And also for the, let me say, individuals, the gasoline prices and also the food prices, food inflation, we can face. So that's, I think those type of headlines will not sound good for everyone, but we could see it. On the other hand, the daily production of United States, the United States is the first, let me say, country who produce more than any other countries on daily basis. They are also profiting for that type of, let me say, hike on the oil side because of the Venezuelan oil and also their own, let me say, production, which Mr. Trump stated also today. So they are also benefiting from that. But in the long run, I think they will have, and together with them, we will have more problem, including in the first rank, inflation. And after that, it could come also recession, which means stagflation, which is not good for everyone, for the world economy.
Cuneyt, it does not look good, but we thank you very much indeed for such a thorough analysis. Thank you very much.
Thanks a lot. Bye.